Good evening, traders. Today's Thursday, March 16th, and we're just going to get to the end point and then work our way backwards this evening. Today, we went to the wedge top, actually, and you're going to see tweets in a little bit. At the time, all day, all trading day, I didn't realize where we were. So you'll see me start to question things in the tweets, not realizing we just made our way to the wedge top today. Turn on my pointer. Right there. And I'm going to show you more evidence of that. I think tomorrow is going to be a down day. Red candle down day. Because futures right now just banging up on against that top, banging up against the top. I think the only direction for now to close out the week is down. Not up. Not break out of the wedge. No, that doesn't make sense. That makes no sense at all. The time to break out of the wedge will be next week, FOMC. That's the catalyst. Friday, there's no justifiable catalyst. FOMC, interest rates, all that stuff. That's the catalyst. Not tomorrow. Tomorrow we will not be breaking out of that wedge like this. The logical direction is down. Why? Because what happened this week? Up, down, up, down. It doesn't make sense to go down, up, up even more. That doesn't make any sense. Because today's move, as you will see me tweet, I kept saying, I was like, this is not natural. Something is off. It's because we were making we're going to the top of the wedge. That's why. It was an impulsive move today. And now all the pieces fit. Okay. This is tonight. Actually, yeah, well, it was today. And see that? Banging up against there. This is how we closed. You'll see me, my tweets. I'm kind of questioning. I'm like, man, what is going on here? Yeah. Hit the top of the wedge. Hit the top of the wedge. Look at the MACD formation. Basically, a declining slide. Why? Because the wedge was banging up against this. It was banging up against the top of the wedge. That's why the MACD took this shape. That fits perfectly. It fits perfectly. Okay? So here's an example of an impulsive wedge move right here. I just want to call attention right there. When you were at the base of the wedge, you're going to go from low to high quickly. Quickly and impulsively. That was what happened intraday today. Quick and impulsive. Went straight to the top of that wedge. That's what happened. Too bad I didn't figure it out until like 7 p.m. at night. But better late than never. Okay, so you'll see. I'll show you the tweets here in a little bit. I kept questioning what is this is not natural. This is not normal. Okay. Here you have it. This is futures over the past. Oh, what do we got here? Oh, we'll just call it the past week, ever since the 9th. Look, down at the bottom, down at the bottom, now going back to the top. Okay, so we still have some chop going on over here. We still have some chop. I think tomorrow it's going to go down. That's just the natural. It's the natural way. So we've been at the bottom of the wedge now. See that? And finally, we went to the top. But it's at this point of the wedge now where that's more narrow. Because it got everybody thinking during the day, like, wow, man, you'll see the tweets that I have too. I'm like, Hey, you guys know we actually broke previous highs back on like the 10th, So everyone's thinking, "Oh, see, now we're making higher highs from the previous week," thinking that the uptrend has resumed when actually we are just in a broader wedge. Okay? And as I see here, we are still in the wedge. The next logical move is down. Now, I do believe that down move is going to create a higher low. I still think that is still intact. But I do think the next logical move is actually down, not up. What is this? The 5-minute chart? Okay. So, yep, this is futures as of, well, not too long ago. See, look at that. Boom, come back down. Boom, come back down. I bet you all going to try again. I can't imagine futures doing this all night. Eventually, it's going to give up and it's just going to go. I think it's going to go down. Eventually, it's going to give up because you can't. It's not your time to take it. It's just you don't have the catalyst yet to break out of this wedge. That's next week. All right, here come the tweets. Again, put this into context. All of the tweets today were without knowledge yet that we were heading towards the wedge top, which is it's right here. Okay, didn't know. So put that in context as you look at review the tweets. Okay, so this pink line is the downtrend line. You'll see me reference. I think I included that in the tweets. I'm pretty sure I did. This blue line here, this solid blue line, was the old wedge that I thought we were in. See? So actually, it's not that this was invalid. We could be a wedge within a wedge, right? A smaller wedge within a larger wedge. Of course you can be. We've seen that over and over again. A wedge within a wedge. Megaphone within a megaphone. A wedge within a megaphone. Whatever. So, all right. Basically at opening bell, right here. Oh, right here, actually, or thereabouts. I just started nibbling along because as soon as I saw us go underneath this channel and I saw these wake up, wake up, wake up, I was like, oh yeah, I'm nibbling along. Okay, went long down here underneath the channel. Okay, it came up here, right here. Now, I went long down here and I got out right there. So, quick 15% gain, scalped it, right? Because, at the time I was like, well, good enough for me. And so, yeah, at the time, see right here, at the time when you look straight down, look, it's too far below the zero line. I'm like, no, you're not gonna take that the MACD is too far below the zero line. You're not gonna take the EMA 50 yet. That's why I scalped out. I'm like, nope, I'm out. I bought down here, sold up there, I'm out. So, yep. As expected, you cannot take over the EMA 50 yet because the MACD is too far below the zero line. That's these two big red candles here. That was equivalent to right here. So yeah, see, too far below the zero line. You're not going to take it. Could have gotten puts at the top when I sold my calls. Oh well. Okay, so here, right here, in 5 minutes, the 65-minute candle closes. Okay, I'm going to call importance to this emphasis again. When the 65-minute candle closes, that's when you can expect moves to happen. So I sent that tweet right here. What happened? Right here. What happened when the 65-minute candle closed? Boom. Time and time again. That's when you can expect moves to happen. So all these boxes are me color coding manually. I had to manually do it. This is not an indicator. I manually track these 65-minute candles. Okay, so you could see. Well, this one's a consolidation candle. See, that is more. It's just sideways. It came to the top, consolidate. But look at this candle. Boom, up. This candle, I would consider that a down move, right? Down. Look at this candle, up. See, 65-minute candles correlate like this is pre-market down. You bet they matter, and you bet I'm tracking those suckers like a scout intraday. I'm always calling it out on Twitter. Hey, you guys, in 5 minutes, in 2 minutes, this candle's gonna close. Something's gonna happen, and it does too. Okay, what do we got here? Right, just the one? Oh yeah, I was calling these candles right here. In 4 minutes, the 65-minute candle closes, and it's back at the EMA 50. Yep, right here. And it took off. Okay. Oh, I keep talking about the same 65-minute candle. That would have been right here. Yes. Yes, right here. Wick down from the MACD is too far below the zero line. Let's see here. That would have been. Is it right there? Okay. See, look at this. This is this morning. Okay, this is key. I didn't realize at the time the significance of what I'm tweeting. The wick down from the MACD is too far below the zero line. That would have been like right here at the time. Yeah, too far below. However, the market maker can override all of this with a pump short squeeze. That's exactly what this was, guys. This was a short squeeze. This is not a natural grind up. This is a short squeeze. But see, I said it. I tweeted that out right here before we actually got the squeeze. I said, MM can override all of this with a short squeeze. In that case, it would bust through EMA 50 and not even backtest it. That is consequential. I tweeted that before I knew what was going to happen. Because guess what? All day long, including this data point right here, it did not touch the EMA 50. It did not even backtest it. See? This is actually important. It didn't backtest it. I'm going to show you some other tweets a little bit later of what happens when you don't backtest it. Ha ha. Boom. It's a squeeze. The squeeze is on. But I even said, yeah, I've seen this kind of head fake before, so I was going to wait for the next couple candles. Okay. So, okay. Yes, right here. This is that tweet I sent. It was right here. Equivalent. I'd consider scalping out of some calls here because it's at the pink. This is the pink downtrend line that started since March 6th, 10 days ago, guys. Okay. So here you go. Here you hear me comment. I'm like, this move is unnatural. Too many consecutive green candles. Yeah, you bet it was. You bet it was unnatural. So I'm already starting to sense things are not quite right. Something's off. Because we were going straight to the top of that wedge all along. Okay, so at the time I'm referring to that tweet right here. No coincidence, it's wicking down at 391.40. Yeah, 391.40-ish. Wicking down right here, which at the time I thought was the wedge top. So as we know, as I said earlier, it could be a wedge within a wedge. So it's not that this was inaccurate. Both can be true. This is a wedge, and up here is a wedge, right? So you can both be true. Simply because the look at this, it went flush. This candle went flush up to the wedge. This wick down, touching the wedge. So it's they both can be true. Okay. It was at this point actually I said, you know what? Because at the time I thought, oh, that's the wedge, you know. And yeah, I saw this at the time. It was a red candle wick down. I was like, oh yeah, I'm gonna give me some puts. However, when it just took the high from 393.45 on March 14th, 393.45. That would have been up here. I think I'm showing you the hourly. Is that right? Yeah, this is the hourly, so it's kind of tough. Up here. Yeah, as soon as it took 393.45, the previous trading, uh, 2 trading days ago, took out that high. I was like, ooh, I'm out. Now you're making higher highs. See? Now you're making higher highs. Now, in context at the time, I didn't know we were going towards the top of that wedge. I thought, ooh, we're making higher highs from a previous day. So, oh yeah, I'm getting out of puts. You just broke the higher high, so you shouldn't be holding on to puts in that situation. Okay, here we go again. In 12 minutes, the 65-minute candle closes. Yeah, that would have been right here ish, right here. So, and I expect a backtest leg, ha ha, in the next 65-minute candle, which would have been this one. Would have been this one. If it's a shallow backtest, I'll go long. Well, guess what? It was a shallow backtest. See, now you can actually start to anticipate what the market maker's gonna do. Knowing that in 12 minutes the existing 65-minute candle is going to close, now it makes sense that, oh, this is going to be a pivot point area. I expect you can now actually anticipate and expect a backtest leg in the next 65-minute candle. If it was shallow, I'll go long. Lo and behold, it was shallow. So, yep, shaking my head. 310 is the high. 393.80. Here. That's the pink line right here. Yep, pink line right here. I mean, we came within inches of it. Actually, now hindsight is 2020. Well, we broke it. Okay. Yeah, here we go. 393.80 is broken. Yeah, we took it all right. Boop. I was like, oh man, we're making higher highs now, right? Not knowing at the time. Again, we're in a wedge. The top of the wedge is still up there, but I was like, whoa, is this like a trend change or what? Yeah, see, here I am. Totally unexpected that this would happen so soon. I need to ponder this more. This is at the time, not knowing this is a wedge. Okay, see, I'm summarizing what happened today. Broke through the pink downtrend line from 3.6, right here, this one. Broke through the wedge top at 391.50, right here. Broke through previous highs on 310, 393.80, this pink line. You see what I mean? So you broke through this, you broke through that, you broke through this. Like, whoa. A normal, reasonable person would think, oh yeah, I think we're making higher highs. I think we got a trend reversal. However, I've noted you reclaimed EMA 50, but no back test. No back test. I have said in previous episodes, I will not make an exception. I think I have some tweets that I'm going to show you where I said that. I will not make an exception. You must back test. If you do not, or you're going to come back later and do it, you will come back later and do it. And I think that later is going to be tomorrow morning, honestly. It's going to be big red day. Okay? So, okay, scaling long. I suspect I know what to watch for. That would have been right here. Yes, right here. I scaled long. I suspect this is at the time, but I said it right here. No matter what happens next, price will make higher highs. By this time, here's what I know. Right, I sent the tweet right here. And that's exactly what we did, didn't we? Higher highs. We just kept on going up. How did I know that? I knew that because look at the scenarios. A or B. By the time I saw this move happening, I was like, there's only two possible scenarios here. Just two. There's no third scenario. Scenario A. In the consolidation phase coming down here, let me zoom in. No. Zoom in. Scenario A. When you consolidate down, you're going to come up. If this up move is lower than that, that's bearish. Scenario B is you're going to come down and you're going to come up. If this up move is higher than your beginning point, that's bullish. There's only two possibilities. Just because of the strength of this move, look at how far above the zero line it was. And just the move all morning, I was like, oh yeah, there's only two possibilities here. This is it. And that's what I talked about. Scenario A is bearish divergence. Scenario B is neutral convergence, which negates bearish divergence. Neutral convergence means MACD follows the price. Okay? So, come to turn out, it was scenario A right here. That is higher than that. So scenario A shows bearish divergence. Bearish divergence. Why was it bearish? Because it was getting close to the wedge top. Close. Not quite there yet, but it's getting close. That perfectly explains this wedge top that's invisible right now because I didn't know it at the time. That's why the MACD is going down and down and down and down. Because you're slamming up against that resistance line and you can't pass it. That's why. Okay. In 7 minutes, the 65-minute candle. Oh, this one. Oh, actually, it'd be it's right here. Right here. Yep. Right here. The 65-minute candle closes. The 5-minute is wicking up from the SMA 20. A sign of what's coming. Guess what? When that 65-minute candle closed, what happened? Up we go. There's the move yet again. You can anticipate yet again there's a move coming. All by tracking the 65-minute candle when it closes. Watching closely. Oh, that would have been right here. If either one can make a MACD positive cross. I was referring to this point right here, which we now know. At the time, it was under curling up, but now we know it's under curling up, went above it, and went back down below it. So it was technically a MACD positive cross. Okay. So right here, I scalped out of my calls. Okay, so got in here, got out. Oh, I got out right there. Whatever. It's just a quick scalp. Whatever works. So, because heck, I knew right there. That's a major channel line. I'm not messing around with that. come to find out, that was the right move because what happened? We went up a little bit and then we went down for 2 hours. We were in some downward chop for 2 hours since this is a 65-minute candle. Here's another 65-minute candle. Okay, scalped out. Get out. Yeah, here's what I'm saying. If the MACD fails to curl up, then there's bearish divergence is confirmed. Which, now we know it was bearish divergence. Confirmed. See, at this point, you just have to look at the indicators. Yeah, that's bearish. This is bearish, and what happened? It went down. Regardless of whether it's shallow or deep, that's not for anyone to make a predetermined forecast. It's what's more important is, did you get the direction right at all? Not whether it's shallow or deep. That doesn't matter. It's, were you even right in getting the direction that it's gonna go down? Okay. So there you have it. Okay, right here. Yeah, right here. I'm scaling puts. It's going to fall. Bearish divergence confirmed. And that is a true statement. This is higher than that. This is lower than that. That's bearish divergence confirmed. And I got puts. So that was the right move. Okay, there it is, very subtle. At the red channel right here. I would have been referred to right here. It's now resistance. Before it was support, and now it's resistance. You can start to see, you can see that as resistance, 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 resistance. Okay. And the MACD was curling down. See, check it out, check it out. Down, 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 down. It's like, how could you hold on to puts knowing these indicators are blaring at you? Get out. You don't know when the bottom is going to drop out, right? You have to get out. You have to rely on the indicators. You cannot just rely on your belief or hopium that, oh no, we're going up. It's going to squeeze. Knowing, not actually, now in hindsight, it's 2020. This whole time, the top is right here. The top is right, of course, I didn't know that at the time, right? The wedge top is right there. We were already near the ceiling for the day. Okay, new 65 candle just opened. It's at resistance now. Oh, that would have been right here. Here we go. Yeah. So this one is just more downside. Let's see if the move down happens very soon. Guess what? It did. See, once again, the 65-minute candle opens up. You can anticipate some move in some capacity is going to happen. You can almost time it. You can say, well, let's see here. In about 7 minutes from now, something's going to happen. And then you can now start to look at the other clues of what's been happening and say, yeah, this one's actually going to be a down move. See? You can actually better time the market. So yeah, here I'm just saying it bypassed EMA 50 in the morning so that EMA 50 would rise all day right here. Basically, it's naturally going to rise. The moving averages follow the price. So, but I suspect now it's going to backtest EMA 50 at 393.11. Oh, that would have been at the time, like right here. Ish. Yeah, right here. Something like that. It got close, didn't it? It got close, but it did not touch it. Oh, so here I'm just talking about some very subtle details. Rejection at the 395 right here. Yeah, you can see the rejection going on, which is now resistance wicking down. And now you failed this back test on the SMA 20. This is the gray line right here. Now you're failing the SMA 20 gray line, okay? And um, and now you're wicking down from that, okay? So you can see these little subtle details. Now, okay, if by closing bell, the EMA 50 is successfully backtested right here, that would have been at the time right here, then I will call the trend change official today. Today I'll call it. Was that true? Nope. It never touched EMA 50. Okay. Oh, here I'm just calling out that notice after it was rejected from SMA 20 right here, see that? This time it didn't even touch the SMA 20. Okay. Remember the trading rule. It has to touch EMA 50 sooner or later. It always does. One way or another, EMA 50 is going to get what's due. Sooner or later, it always does. Okay, 65-minute candle closes. A move's coming. Right here's when I sent that tweet. A move is coming. And guess what the move was? Down. See that? Once again, you can anticipate a move is coming. Basically, it's kind of like you can almost time your moves around when the next 65-minute candle is starting. Okay. See this? You guys watching this? Right here. Just doji. Wick down. Wick down. Doji. I mean, because at the time I didn't know this. I didn't know this. Now I do. Because we're near the wedge top. That's what I kept looking. I was like, are you guys seeing this? Are you guys watching this? What's all this doji? Wick down, doji. It's not conducive to like, well, yeah, that looks like that's gonna surge to me. No, it doesn't. It it can't get lift. And let me see if I keep talking about this. Still watching. There's something about this. Yeah, see? I'm just watching it. I'm like, there's something about this I don't like. I'm still holding my puts. Okay, here's where this green candle right here. Yeah, right here. I said, I'm going to get calls, but keep my puts. I'm not going to sell my puts. Cheating EMA 50, meaning you didn't even backtest it right here. You didn't touch the EMA 50. Cheating it is against my rules. Something tells me it will come down later, perhaps tonight or tomorrow. Now, check this out. I actually, like a few moments later, okay, I'm changing my mind. I'm getting out of it. I'm getting out of calls. Something is off. See? So I'm saying all this stuff, not knowing at the time. Right here, we're actually at resistance now. So, yeah, that's when I got out of my calls. I'm like, you know what? Nah, I don't like this. I don't like it. You got to go with your gut if something doesn't seem right. Okay, here we go. Can't get lift. Right here. It just couldn't take off because what happened was it's like putting a rocket inside of a box. Well, it ain't gonna take long for that rocket to slam up against the top of the box, right? The rocket can't get lift because it's near the ceiling already. It's near resistance. Yeah, with bearish divergence. Look at this. It's just bearish all day, down, 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 down. Okay. All right. I'm going to zoom into this just so. Look what happened. Okay, wait. Okay. On March 6th, I tweeted at 8:34 a.m. I said, it didn't touch EMA 50. I won't make exceptions. What was I referring to? I was referring to this candle right here. I hope you can kind of see it. Here's the EMA 50 right here, the red line. See that? See how the wick didn't touch it? It didn't touch EMA 50. That's what I was referring to down here. What happened later that afternoon? Oh, you're going to touch EMA 50 and you're going to keep on going down past that. That's what happens. You cannot cheat EMA 50 full stop. And that's exactly what happened today, right there. You cheated. You cheated EMA 50. You didn't backtest to it. You almost did, but you didn't. But you didn't touch it because this whole thing was a short squeeze. For some of you who may not be familiar with what exactly a short squeeze is, it's basically market makers are forced to buy the underlying stock when they get a boatload of calls, call orders, call orders, call orders. They must buy the underlying stock because I could technically 5 minutes later turn right around and say, you know what, I'm going to exercise that option to buy that stock. So you have to have it on hand. Okay? So that's what a short squeeze is. Here's the problem with short squeezes. That's not bona fide investing. That's just an artifact of a whole bunch of people like me buying call options, forcing the market makers to turn around and buy the underlying stock for that option in the event I choose to exercise that option. So that's not bona fide investing. See what I mean? This is just artifacts of trading, right? So the problem is when the short squeeze ends, it's going to end at some time. You have no more bona fide buyers of that stock. And so what happens at the end of a short squeeze? We call them pump and we call them dump. It's going to dump because there aren't bona fide buyers. So you have to really, really think about if we're really going to have a rally, an uptrend rally, that has to be from bona fide investors, not short squeezes. That is not sustainable. Today was a short squeeze. It was not bona fide investing. And so that's why, looking back, that did not touch the EMA 50 right here because it was a short squeeze. It wasn't bona fide investing because when that squeeze wears off, I can guarantee you this candle is going to fail that EMA 50 backtest because you don't have bona fide buyers anymore. The squeeze is over. And that's why it masked it. It didn't even backtest because it knew that if it did, it would fail. You don't have bona fide investors. That's why it didn't backtest because it knows it would fail if it backtested it. There you have it. So, tomorrow, watch to see if we have follow through. I don't think we will. I think we're going to go down tomorrow because we're at the top of that wedge now. And look at what I said here. You reclaimed EMA 50 right here, but you didn't backtest to it because it was nothing but a short squeeze today. A short squeeze to the top of the wedge. And once again, look at these massive bearish divergences I'm calling out. Look at that. It's just going down, 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 down. While the price keeps going up, 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 up. Something's just off. Okay. all other times I've mentioned the MACD surging up in extended hours. But look what happened tonight. The MACD plummeted down. All of the times I've shown you in extended hours, actually I showed you guys the reverse. The MACD went up, not down. So this is the first time I'm showing you this. The MACD went down. Okay, I think that is potentially a sign of things to come. And that's all I got. Feel free to follow me on Twitter where I'm giving real-time tweets. Intraday. Don't forget to listen to your favorite music as you are trading. It affects your state of mind, helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.